Joining us now with his crude outlook. That's what it said.
Oh, I thought you were making fun of the yesterday.
No, I like the crude outlook. It's an outlook on crude oil. But, Ed, keep it clean, okay? Ed Morse, Global Head of Commodities Research at Citi, joins us right now. What happened, and why would another increase, if it had been no increase, you would think that would even be more bullish for oil? But do you tie what happened yesterday in oil to something the Fed did? And have we refilled the SPR? Have we done that yet? We got to do that, don't we? We should do it now.
Well, we're far from doing it, and I think politically and just given the status of the caverns, they can't do it until the end of the year. But certainly, it would be strange if by this time next year we were not adding. Prices stay at the level that they're staying.
Why? What's been the dynamic? I would think that if the economy is as strong as the Fed thinks and as the labor market thinks, if China's reopening, if demand is going up, why are we at $70? Why aren't we higher?
We're at $70 a barrel for two reasons. First of all, the market is significantly weaker than the bulls would have you think. We had the IEA indicating that the stock build in the OECD countries was 1.7 million barrels a day in the month of January. We calculate that from all the high frequency data we can look at, the stock build year to date is about 1 million barrels a day. Most people thought inventory is going to be falling. They're growing. So the market is weak. And part of the sell-off was because the market was significantly inflated on the expectation that with the China reopening and with no recession really in sight at the time, that demand was going to be skyrocketing. And the consensus was there wasn't enough oil in the world. And that just is turning out to be empirically not true. There's more oil than people think, and demand is significantly weaker. The China rebound is not yet there. We expect that it will be there by the end of the year, but it's certainly not there. People are not consuming goods, they're consuming services, and services are just not very oil intensive. And yeah, aviation is coming back in a very big way, but the economy's growth there is based on services, just as it is in the US. And what people haven't really taken into account is the significant pivotal role that the US is now playing in the market. Demand is just frankly really down, and people don't want to admit it. Demand is down about 1.3 million barrels a day in our growing, healthy economy, and that's probably due to structural changes. Our production is up. If we look at the year-on-year numbers, it's up well over 1 million barrels a day for all liquids. And that increase in production and that decrease in demand in this country has meant more than 2 million barrel a day increase in our exports. So the U.S. is exporting, in terms of the data that we had yesterday, something like 12 million barrels a day. That's an extraordinary. And we expect that's going to continue for the rest of the year.